And good evening. This is the Elliott Wave update for the S&P 500 for Tuesday, June 14th, 2022. Basically an inside day today in anticipation of we've had several days of some very strong declines. We did manage today in the S&P to go down and produce an additional low, which is basically what I was looking for. And I have updated the count, although it's a little bit out of alignment here, but once I switch it down to the hourly, we'll see exactly where it is. But it does appear that we likely have completed that minute wave 3, as I have been discussing. Now, again, I just wanted to wrap around all of this. While these declines have been very strong, within the context of the minor third wave, it's not enough. We still, and just if we just go on a straight Elliott basis, of what this third wave should look like in comparison to this first wave. Here we have minor wave 1. If we're in minor wave 3, I'm looking for this to be at least the same in length, and that puts it down to 3370. If not, even longer and larger. And now we're talking about drifting below 3200, drifting below 3100, just to complete the minor third wave. So the intensity, the size of this C wave is pretty big. And or just the size of this 5-wave structure coming down off of this high is pretty big. And we are still in the midst of it. So I don't want to be misleading and talk and feeling that, well, I'm counting too fast. I'm counting the 5 waves and the 3-wave structures. Now, what degree is what may change? So it may not be minute. We may be only in a sub-minute level. So the degree of what's happening is what may be changing. But right now, minor degree is what I'm indicating for this particular decline. It maybe within it have finished minute wave 3. Then we have a minute 4 and then a minute 5 to complete the minor 3. And if this is the case, if this holds, and we get a 4th and then a 5th, that 5th wave may be a killer. It could be an additional strong decline that we just are coming out of. If we take this up and we look at the weekly chart again, we had 7 weeks of downside action. I would equate that in the third, which is going to be the longest and the strongest, that are having at least 7 weeks, if not more, to finish its third wave, its pattern. So again, we still have quite a bit to go before we reach a bottom, a tradable, more sustainable bottom. So I wouldn't be focused on, I need to pick the bottom. I want to be here for the bottom because it's going to take some time. We are going to have short-term bottoms. We're going to have maybe a day bottom or an hourly bottom or things of that nature. But in terms of a tradable where it's going to last a few weeks, possibly a few months, that is out there in the future. And I'm talking late July, August, possibly even September. Now that's just my feeling and my history with Elliott as I put it together to try to put the time frame with the wave structure, that these are the indications that I'm getting. Back to what we're doing right now. We are due for a bounce, and I'm going to count it as a wave 4 bounce, a minute wave 4 bounce. Now, as I've been continuing to discuss, the hourly 20 moving average has been fairly consistent in being a resistance point and holding back rally attempts. We did break above it overnight in Globex, but it failed and it sank back below. We came up again early, still in our day, and it failed. And the opening could not get above it. And then we tested it, and then we tested it again early afternoon, and it failed. Now, in this wave 4, I'm already going to say that it's going to have trouble at 40, what was that, 37.61. That's where the 20 now lies. And trust me, we're within 9 points of it right now. So is it going to get up there and fail and get up there and fail? But I would suspect that it's going to break and we will start heading towards, first of all, this resistance at 37.89, but the 50, the hourly 50 at 38.12. I'm going to round that up, 38.12. Now, I'm going to suspect right now that that 50 is going to present us with some pretty stiff resistance. Now, if I just say that from that low, we're going to just put in what Fibonacci has to say about a fourth wave. Granted, this third wave is pretty large. So the fourth wave, we are looking at the most common is 382, 38.2% retracement. Well, that puts us up at 38.88, 83 to 88. That's a pretty big move considering what we've just done. So the other Elliott guideline tells us that a fourth wave would be finding its terminus, its endpoint, at the endpoint of the fourth wave of 1 lesser degree. That's right here. So our resistance for this move fits right around that 50, hourly 50 moving average. So that's what I'm going to call right now, but we're going to find resistance because it's been that way. It may break above, but it's going to come back down. So it's going to take, I think, several times for this to really catch fire and move. And then on top of it, we have Fed meeting tomorrow. On top of that, we have a major future options expiration, a quarterly, a monthly, quadruple futures and options all going out Friday, June the 17th. We are already seeing the gamma explosion. Remember, it's like even last week when I was talking before we saw all of this decline, that the powers that be are going to want to see this at particular levels. And as this thing moves around, either to the upside or the downside, and it starts whipping through strike prices, like we have seen in Apple and Amazon and all of these component stocks within the S&P, it produces what is known today as a gamma squeeze, because the hedging on positions is never one, I shouldn't say never, is often not one-to-one. Because if it's out of the money option, suddenly becomes in the money option, your gamma explodes. Your gamma explodes in your face, and as you start sliding through these strike prices for the puts and the calls, it changes your deltas. It changes your position of being long to short or short to long. And as we're tumbling down, and instead of being short with the market, you're getting longer and longer and longer because you're going through strike prices. And then the strike prices you're going through, where your position is, start falling by the wayside. And what happens is your gamma explodes and your delta responds. And suddenly, instead of being short as we go down, you turn in and now you're long, and you get longer and longer and longer. So you must adjust. And that would be to sell to get neutral. So we've got all that going on. So we have a lot of mitigating / aggravating situations that are going to be in play as we work our way to Friday. So what can I say about this move? I am expecting a bounce. Globex opening higher, not majorly higher. S&P's up about 12. The NASDAQ is up about 50. And then they hold it. Why? Because tomorrow is Fed Day. And we're getting a lot of information about inflation and interest rates. Here's a little tidbit that I shared within the NASDAQ update, and I'm going to bring it here to all of us here for the S&P update. The latest auction for the 52-week Treasury bill, so the one-year Treasury bill, 3.2% interest is being paid to those that are purchasing a one-year Treasury bill. Now, don't forget, these were paying 0.25%, 1/3%, 0.5%. I think it got up to 0.75%. And now suddenly it's jumping to 3.2%. That's what the government is going, the Treasury of the United States is going to be paying. Give them the money. They need the money. So they're going to pay more interest. So what does that do to all the credit unions, federal and otherwise? It just makes them going to have to raise the rates. They have to raise the rates if they want to continue to receive funds to use for whatever the purpose is. Here we have it, folks. This is what I've been talking about. We're filtering it through the system. Interest rates are going up. It's just a part of what this whole thing is producing. Now, with that happening tomorrow, all eyes will be on the Fed. The announcement comes out at 2 p.m. Eastern, 11 o'clock Pacific. Then we have Chairman Powell with his press conference that begins at 2:30 Eastern, 11:30 Pacific. I would suspect that there's going to be a very initial reaction to whatever the rate is going to come out as. Will it be 50%? Will it be a 50 basis point? Will it be 75 basis points? Or will it be 100 basis points, a full point? There's that talk going out. What's going to be considered a surprise to the market? What's going to be considered a threat to the market, et cetera? It's all out there. We don't know. Remember last time they raised it 50% and we thought that was great. And they rallied the market. We only have to go back to take a peek. Go look at what happened in March. Here we are. That was May. I have to go back. I have to go. Sorry, I thought I was on my daily chart. I will get us there. March. That was the day. Will we get the same reaction? I don't know. What if it comes out at 75 basis points? Is that going to be like a shock? Is that going to be like, oh my God, interest rates are moving up and we react to the downside? I do not know. We're looking for a wave 4 correction. Not supposed to be real big. So the initial reaction, buy. And then no. So the 4 relinquishes to the 5. And we're still, here is wave 1. This is all we got so far of wave 3. It cannot be the shortest wave. That's where it just equals wave 1, 33.70. So what's it going to take to get down there? A whole bunch of factors, and they're all coming to create the perfect storm to get us there. So be ready, be prepared. Do not be bullish, do not be bearish. Trade the price action. I feel if you trade with a strong set of rules, your own trading rules, not anybody else's, your trading rules, then you're going to know why you're getting into position, what your target is on that trade, and where you're going to get out should the trade become invalidated. Don't be worried about taking losses. Don't get caught up in that. Well, I know it's going to turn around. I know it's going to turn around. It's going to come back. It's going to come back, or it's going to go down. It's going to go down. The market is crazy right now. The market is reacting to a lot of input. A lot of things are going on. And we still are dealing with the roll between the futures markets. We still have 2 more days before these futures expire. So we're running out of time as far as if you're still looking to roll out your June futures into September or just get out of your June futures. Time's running out. The spread has jumped in price. So the longer they wait, the more it's going to cost them. And that's going to be the September over June. So these are all factors. And we've got to deal with it because we're just trading the future. And so putting that together, it's really going to behoove all of us to not be bullish, to not be bearish, to trade the price action, use the moving averages, use the Fibonacci, use the Elliott. And again, just use your price action. Anything that's happening in any of these stocks that are components in the S&P will be reflected in the price of the S&P. So we don't have to know why they're doing it. We're going to see it. And if you start breaking above moving averages, if you start breaking above resistance points, you're going to know what your next trade is. And you're going to be able to pick out where you believe it should be going next. So trade with your rules. Don't fail yourself. Keep your rules in mind. Use the moving averages. Have a great trading day tomorrow, where much will be revealed. And our next update will be on Wednesday, June 15th.